All right, good morning, everyone. Good morning. We're going to get to our next panel, and this is the accounting panel. My name is Dave Erickson. I'm the retired director of the Small Business Development Center at ASU, and also I'm currently an adjunct instructor at Angelo State University teaching entrepreneurship. So I'm very happy that Desiree Johnson with the SBDC and Elizabeth Dancer contacted me, so I needed something to do since I'm retired. And this came in just perfect, so I appreciate that. We have a distinguished panel today of subject matter experts in the accounting and bookkeeping field. So it's my honor to introduce them and also to ask them questions about accounting and bookkeeping for small businesses, which is a very important topic. First of all, we have Mrs. Brandy Owens. Brandy, okay. Brandy is a partner with HOS Business Solutions here in San Angelo. She's been in the accounting industry for over 15 years. She has a passion for learning and finding efficient ways to help her small business clients overcome the challenges they face regarding their bookkeeping, payroll, and accounting needs. She is a certified public bookkeeper licensed by the National Association of Certified Public Bookkeepers. Rainey is a QuickBooks Certified Pro Advisor, certified in desktop, online, enterprise, and QuickBooks Payroll. Thank you for being here, Brandy. Next, we have Ms. Meghan Kauten. She's a CPA and a partner with Oliver, Rainey, Wojtek, LLP here in San Angelo. Meghan has been with Oliver, Rainey, and Wojtek since 2006 and is a partner in the firm. She provides individual and business consulting and compliance services. She is a member of the American Institute of Certified Public Accountants and the Texas Society of Certified Public Accountants as well. She previously served as president of the San Angelo chapter of the Texas Society of Certified Public Accountants. Meghan is a 2007 graduate of Angelo State University, also serves as a director for the business incubator here in town called the Business Factory. Thank you, Meghan, for being here. Last, we have Gayla Thornton. Gayla is a CPA and a partner with Armstrong, Backus and Company, LLP. Sorry about that.
That's okay.
Gayla graduated from Angelo State University with a bachelor and master's degree in business administration. She has been with Armstrong, Backus and Company for 22 years and has been a partner for 9 years. Gayla is the accounting and audit services partner at the firm, specializing in small businesses, not-for-profit, government employee benefit plans, and construction accounting. She has become an expert in fraud prevention and enhancing internal controls. Thank you, Gayla, for being here. Thank you all. So we're going to dive right into questions. I'm going to ask them a series of questions. They'll answer it, and they'll all answer it multiple times if necessary. Each one of them will chime in. So Meghan, you get the first question. And these questions came from this panel. When I'm starting a business, what kind of entity do I need to form? The second part of the question is, what is the difference between a sole proprietorship, LLC, and S Corp?
Thank you, Dave. So when you're starting a business, it's common to not know which type of business you want to start. The simplest form that you can start is a sole proprietorship and have a DBA for your business. This doesn't allow any liability protection through the state, and so if you're in an industry that has potentially some liability where you need to protect maybe your personal assets or other assets that you have from any liabilities that your business may incur, you may want to set up an LLC. It's very common, especially in the state of Texas, to set up an LLC. It's fairly inexpensive and easy to operate. Sometimes entities will set up corporations, S corporations or C corporations, which are a little bit more complex. So we usually want to work with your advisors, whether it's an attorney or your accountant, to determine what kind of business you're starting, what are the risks, what are the size of your business, and what makes sense for you. Talking about taxes with your business, if you're just an LLC, whether you own it individually or whether you own it with a spouse, This LLC doesn't have a separate tax return. You don't have to worry about a separate tax filing with the IRS. All of that activity gets reported to you on your personal tax return. If you have partners, then you may have a partnership tax return, and it has its own separate tax return, and all of the profits from your partnership get reported to the IRS on its own tax return, and then those profits get split out according to your ownership percentage, where onto a Form K-1, and then that K-1 gets reported onto your individual tax return.
Very good. Does anyone want to add to that? Okay, very good, thank you. All right, Brandy, what accounting software do you recommend for my small business?
Well, that's sometimes an interesting question, depending on what business you are. There's plenty of software out there that is industry specific, but from a generic small business standpoint, QuickBooks probably is the absolute most popular small business bookkeeping and accounting software locally. If you're working with a local accounting professional, I'm going to say every single one of them works with QuickBooks, either desktop, enterprise, online, whatever it is. If you're needing help from those people, regardless of what software you pick, you want to make sure it's compatible with your accounting office. They'll be able to support you more and help you more. So when making those decisions, there is a bunch of cloud-based accounting software out there that's actually really good and might be better for you as a business than even QuickBooks. But if your accounting professionals can't work with it, and that's why I think a lot of times QuickBooks is selected by most businesses and kind of a one-stop shop.
You want to add to that?
One thing to know about QuickBooks, because I would agree with Brandy, it is the most recommended. It's a matter of time before the desktop version goes away, and you're going to be forced to go to QuickBooks Online. And I know that's scary, especially for a lot of small business owners, but it's a matter of just a couple of years before that happens. And although there's a couple of user differences between the two, don't be scared of QuickBooks Online. It's coming.
Great, well, thank you. One thing about QuickBooks Online, just working with small businesses over the years, is obviously you can have the share permission with your accountant to access your books remotely, and you can be in Hawaii and access your books as well, obviously with QuickBooks Online, which is a very important thing, I think. So, okay. Very good, well, thank you all for that. Gayla, explain the importance of setting up a strong set of books and maintaining accurate accounting records.
So right before we started, I'm going to use your quote. Brandy told us a good quote about, and I'm going to get it wrong, but you think it costs a lot of money to hire a professional, but just wait to see how much it costs to do it yourself. Kind of like that. And so setting up a good set of books is important because if you don't have those good accounting records, you really don't have a clear picture of what your business is doing profit-wise, what customers owe you, what customers are behind on their payments, who do you owe. It's just the more accurate your accounting records are, the better of an accounting picture that your business is going to have. And if you ever have doubts about whether those books are right, involve an accounting professional like a CPA firm that can get in and help make those recommendations, help you tweak the way you do your processes and your accounting records so that you have the best set of books possible going forward. Because if you ever look up one day and you realize that your books are a total wreck, it's going to cost a lot of money to fix. It's better to get it right on the front end.
Okay, very good. Anything else? All right. Okay, Meghan, do I need a separate bank account for my business?
Absolutely, and this is for a couple of different reasons. One, to piggyback off of what Gayla said, it's much easier to account for your business and your transactions in your business if you're not commingling your funds with your personal bank account. It is extremely difficult for a professional to also account for your transactions and be able to differentiate what's personal and what's business. Secondly, from an LLC or a liability perspective, It's very important to keep your business transactions business and your personal transactions personal. And when you commingle those funds, an attorney or somebody can come in and challenge the fact that you do have liability protection with the state as an LLC. If you are commingling those funds, they can argue that that's not really an LLC, that this is just maybe a personal account that you're commingling. And it's also helpful to be able to differentiate, if you're ever challenged by the IRS or any kind of organization that you have compliance with, to be able to differentiate what's a business expense versus what's personal, and maintain the integrity of your business.
The one thing I learned, and you guys tell me if I'm on track, is in certain organizations that you form, like a C Corp, a corporation, if you don't keep your business and personal records separate, obviously with a corporation you have a veil that's gives liability protection for you. One area, if you don't keep your personal and business records separate, they could pierce that veil and determine that you're no longer a corporation. Is that correct?
That's
Along
correct.
those lines? Okay.
Yeah, for sure. I know for a lot of small businesses, especially when you're starting out and you haven't gotten your tax ID number yet and things like that, and that's okay at the beginning, and it's extremely convenient, I know, when you're out and need to make a purchase and you don't have your business card and you've got your personal card to do that, and it's easy to get into that habit. But trying to set those good practices from the beginning will help in the long run.
Okay, very good. Well, thank you. Hey, Brandy, what is the difference between a 1099 contractor and an employee?
So both are workers, obviously, and an actual employee, you as the business owner, as the employer, control, I'm going to say 75% or more of your relationship with that worker. And that is the easiest way for me to summarize the difference between the two, is who's in control of the relationship. A true 1099 contractor, they determine when they come to work. They are out there buying tools and materials and things like that to get the job done. You aren't directly providing them. You don't dictate when they show up or any of that. And those are the key factors. In my experience, a lot of small businesses, especially starting out, they feel it's based on solely on how you pay them, how you choose to pay them, and that you get to choose which one a worker is. In the agencies you're in compliance with on both, you don't get to choose. It comes down to who's in control of that relationship. And essentially, for an employee, you're in control, and therefore they're on payroll, you're doing quarterly payroll reports, you're withholding Social Security, Medicare, income tax, all of that from their checks and paying that in on their behalf. And with a 1099 contractor, they're in control of the relationship. You're not paying for materials or things like that, and they're paying their own taxes and are entirely responsible for them. A lot of times, even an individual that's a 1099 contractor, we were talking about the differences in business types. They might be a true sole proprietor. They're providing these services to other businesses or other people in the public, which is what puts them in control of the relationship, I'm going to say at least 90% of the time.
Okay, good. Just want to say, in my experience with the SBDC working with small business clients, this is one of the most misunderstood area, is do I hire my employees as contractors or do I hire them as real employees? And there's a good explanation there of why you should. One of the things is there's two agencies that are very interested in you classifying your employees correctly. One is the IRS, of course, and the other is Texas Workforce Commission. And people often wonder, well, how do they know if I have misclassified my employees? One of the areas, as I understand it, and I've heard, and the the panel can correct me if I'm wrong, but when somebody leaves your employee, they're going to file for unemployment typically. That's automatic almost, whether they're a contractor or they're an employee. And so Texas Workforce Commission will identify if you're a contractor, have been designated a contractor, they'll say, well, we don't have any record of you being an employee for that firm. Maybe we ought to look into that. And that's typically how audits get started. Is that correct?
Well, you saying that, I was actually going to piggyback off of that. In my experience, most TWC audits that people get caught on misclassified workers, somebody's gone and filed an unemployment claim because it was their understanding they were an employee and they were entitled to those claims. But when there's no record, TWC has no choice but to audit you to handle that claim to begin with. And so then your problem isn't just that one employee and their unemployment claim.
Mm-hmm. Very good. And also, I think, as I understand it as well, TWC has certain industries that they target as well, where maybe that's been a problem before. So, very good. All right, Brandy, I'm going to ask you the next question as well. What are some best practices, bookkeeping best practices that I should keep in mind?
So I feel like we've already kind of touched on some of them. One, the software, and as Gayla already mentioned, starting out with good, clean books absolutely is critical, not just for your accounting, your own management decisions, the reports and stuff you're using to make your management decisions internally in your business. Your input's only as good as your output. So the software you choose and getting that started on the right foot is probably, if you do nothing else, the one thing I would make sure that you do. Meghan spoke about having a separate bank account for your business, intermingling your funds, even if you have separate bank accounts, but you could go the other way and I don't have my personal card and I am using my business debit card for that, that really makes for messy books. And again, from your management decisions and even your accounting professionals looking at that, you want clean books. Those are, for me, probably the two biggest practices that I personally preach. There are other small things that I think are, I say small things, they seem like small things, but they have a big impact. Reconcile your bank accounts, for sure. That's the only way you even know if you have all the information in your books to begin with. And in this day and age where most of us just look at our bank accounts online, we're doing that regularly. We know whether or not most of the time things have cleared or if something cleared that shouldn't have. That's, to a lot of people and even a lot of business owners, their definition of reconciling a bank account anymore. And it's not actually inside that software or even to wherever you're getting your accounting advice from. You definitely want to reconcile those things. Same thing with your credit cards and even your loans. Making sure this information is accurate. And then the fourth thing that I would for sure tack on, find a happy medium with receipts. People do that one extreme or the other. They either don't want to do it at all or they want to keep every little thing, whether it's relevant or not. And neither extreme is good. One means you don't have the records you need to support this stuff, and the other means that you're just swallowed up in it. And whether you do that on paper or electronically, a lot of software can help you manage that these days, including QuickBooks Online. They have apps that you can just take pictures of them, attach them to the transactions, move on, and you've satisfied your record-keeping burden, because you do need these things, but understand what you do and don't need. And if you are a paper keeper and hire an outside source to do this, please don't wait till the end of the year to take every last receipt you have to them.
All right, anything to add to that?
I would just add, if you are starting out and don't know where to start. You've got the software, but you don't know where to go from there. There are resources that you can use. You know, the Small Business Development Center can help with training. Visit with your accountant. They can help you with either showing you how you can outsource it. There are different options. So don't wait until, like Brandy said, don't wait until the end of the year to put everything all together at once, but figure that out from the beginning.
Great, thank you. You know, obviously I'm old school, and I'm just amazed when I first encountered a small business owner making a photo of a check that I was going to give them. Obviously that went straight into QuickBooks, I would assume. And also they can send me an email that provided the invoice, and I could go ahead and pay that right there and standing in front of the small business owner, which is, you know, I found amazing when I first encountered that. So a lot of technology, obviously, nowadays to make that bookkeeping simpler, instead of going back and tackling bookkeeping at midnight, right, for the small business owners. So, okay, all right. Very good. Well, the dreaded tax questions. Meghan, what are the tax implications of purchasing a business?
So if you're purchasing an existing business that already has assets or purchasing into a franchise, you may have some opportunity to deduct some of that original cost that you're purchasing. And it really depends on what you're buying. If you're buying assets such as vehicles, equipment, and things like that, we have more favorable depreciation laws that allow us to accelerate that depreciation and be able to deduct that mostly in the year that you purchase it. You can also depreciate that over a 5 or 7 year period. If you're purchasing real estate, that has to be depreciated over a longer period of time, and so you get less of a tax deduction each year for that. Sometimes you may purchase a franchise or a business that has some intangible assets, such as goodwill, and those kinds of assets have to be amortized over a 15-year period. So again, those take a little bit longer for you to depreciate.
Okay. Also, another tax question regarding sales tax, and you may have heard the phrase, pay your taxes first as a small business owner. Anybody heard that before? Okay, very important. So, Gayla, do I need to register for sales tax in my state?
You do if you sell goods, absolutely.
Okay.
Probably even more importantly, you need to register for franchise tax
Okay.
in your state once you set up that business. But if you sell goods, yes, you need to register for the sales tax. You need to collect that on the front end, and you need to remit that, whether it's monthly, quarterly, annually. They'll let you know when those are due.
Okay. As far as sales tax goes as well, what's the entity that oversees sales tax or franchise tax or use tax for the state of Texas?
That'd be the state comptroller.
State controller? Okay, very good. So that's real important. That's another area that, in my experience, is working with small businesses is misunderstood and very, very important. And all too often, small businesses would get in trouble because they weren't paying their sales tax on time or weren't paying at all because they didn't know. And I'll give you an example of that that came to mind. If you work on mobile or engines like trucks, cars, things like that that are part of a business, as far as I understand, that is not taxable. If it's rolling stock, working on that, you don't charge sales tax. But if it's a stationary engine, like an oil field engine, that is taxable. Is that correct? My experience? Okay.
There are different rules, and if
Yep.
you're ever in doubt, ask your accountant, ask the state comptroller.
Yep, exactly, very good. And because don't guess, because there was an experience with a small business owner that didn't know that or was given the wrong information, and they had a tax bill of $120,000 that they had to write a check for right away because they were working on stationary engines and didn't realize they needed to charge sales tax. So very important that you look into it, use your professionals to help you, and then also the comptroller's office can look into that as well. So
May
very
I
good.
add on one thing to that? You speaking about the engines being taxable versus non-taxable, and then Gayla referencing the rules. Services, don't forget that there are some services in the state of Texas that are taxable. That's probably the number one thing that people are invoicing others for that they don't realize is taxable. The state of Texas has started making services people provide. Even in our own industry, there are things that are taxable. Data entry services, things like that, across industries have now become taxable. And that wasn't even just a few short years ago the case. So make sure and keep up with those too, because even on the engine thing, that's what made me think of that. Sometimes on something like that, where maybe, yes, it is taxable, it's a question of is it the labor and service that I'm providing that's taxable, or still the physical goods I'm selling? But even when you don't have goods in the equation, that is starting to change, so keep up with that taxable services list too.
Very good, thank you. And the Comptroller's Office is mentioned as the organization, the state agency that controls that. And they have a division, for lack of a better word, is a collection division that these folks go out and collect sales tax and audit businesses to make sure that they're paying sales tax or paying the correct sales tax. So again, that's where sometimes the trouble arises. So pay your taxes first and make sure you know what taxes you need to pay for sure. Okay, Gayla, what are steps you can take to help prevent fraud in a small organization?
So fraud is a risk for any organization that has employees. If you're a sole proprietor and you're the only one in your organization and you are the only one that keeps your books, the risk of fraud is low. You're stealing from yourself. But if you have to rely on anyone other than yourself, the risk goes up completely. And when it comes to fraud, I'm going to reference an analogy that I heard from Dave once. There's a three-legged stool where the three factors of fraud are opportunity, pressure, and rationalization. If you were to remove one of those legs, the stool would fall down. And the easiest leg of that stool to remove is opportunity. And that's where a little planning on the front end can really make an impact to prevent fraud in your organization. So opportunity being the lack of segregation of duties. You have the same person who initiates the payment of a check, gets the invoice, writes the check, signs the check, mails the check. The chance for that check going somewhere other than an appropriate vendor is greatly heightened because there isn't anyone overlooking that transaction. So bringing in segregation of duties, having someone different open the mail, having someone different write the check, and by all means having someone different sign the check and review that invoice to match it up with the check is very important. And just adding that little extra step in segregation can really help prevent that fraud. You don't want to have the person who makes the deposit be the one enter the deposit in your books and apply it to customer payments, because there's another opportunity for fraud to exist. And the statistics are overwhelming as to how many small organizations have been affected by fraud. I don't want to ever tell you not to trust your employees. I like to say protect your employees. Don't give them the opportunity to commit the fraud. Put the steps in place to help protect them so that if something happened, then they can come back and say, that couldn't have happened because we had the right internal controls and segregations in place.
Okay, thank you. Anybody else want to add to that?
Another small thing that you can do just as a business owner is just monitor your bank accounts. I think Brandy spoke about reconciling and things like that. That's when a lot of this comes to light. A lot of times is when somebody finally goes in and reconciles the bank. But you as the business owner may have a little bit more insight and know the context of what outgoing transactions should be happening. Should these be going to certain vendors and things like that? And you can probably once a month just scan through those and see, does this look reasonable? Did I pay these vendors? Did I pay these people? Just to make sure that there are no red flags, and let your employees know that you're looking at those, again, to protect them from having that opportunity.
Again, from my experience working with small businesses at the SBDC, at least once, maybe twice a year, we would have clients come to us and then they were victims of fraud or embezzlement. And in many cases, it's devastating for that small business. And many couldn't recover that loss and had to close. And there is professional help you can get, obviously, with your accountants and attorneys to help you through that situation. So that's why it's important just to have those things in place to avoid that issue from ever happening. But we don't often hear about it in the news because obviously a small business wants to keep it under wraps that they were a victim of that. So we don't always hear all the cases in the news of that happening, but all too often we do. So, all right. Back on the tax questions, and Meghan, I'll give this to you again. What are the tax consequences of purchasing capital assets?
So just to piggyback a little bit off of what we talked about earlier, you can take a tax deduction for purchasing assets in your business. The depreciation laws are adjusting every year, and currently they're still pretty favorable where we have the opportunity to take bonus depreciation for assets that have a life of 20 years or less. So this would be qualified vehicles, trucks, equipment, things like that. We are able to take, in 2023, we're able to take 80% bonus depreciation, which tells us we can take 80% of the cost of that asset in the year that you purchase it as a deduction. And it doesn't matter if you finance it or you're able to pay in full for it that year, you're still able to take that full deduction. If you don't need the deduction, you're able to write that off over a 5-year period. And so you can work with your accountant throughout the year to determine what's the best method to take.
Okay. I'm going to throw a question in that you all haven't seen yet. One question that's important for me, and again, with my previous work, there's many accounting services that you can engage with an accounting or bookkeeping firm with, and I like to call it a menu of services or a cafeteria of services. I always tell small business clients that you don't have to buy everything. You can buy what you need. Is that true? And who wants to expound on that?
I'll jump in on that. I would say that that's 100% true, depending on what firm you select and what services they offer. They might all present them bundle packaging, is that the right word, in a different way. But I'm going to say for everybody that I'm aware of in this industry, 100%. They would rather help you with what you need, anything you're hiring them for. You make it easier for them if you allow them to be involved in your pain points. If you don't have pain points in certain areas or certain things don't apply to you and you don't need all their services, that's fine. But they absolutely want to be involved and help you and will work with you to put together services that will benefit you at a price range you can afford.
Okay, very good. We have a few minutes left. Is there any question from the audience that you would like to ask? We have a microphone here. Elizabeth has a microphone for you. Anything you want to ask of the panel in regards to accounting and bookkeeping? Yes.
Testing. Since QuickBooks is so prevalent for so many small businesses, and it's probably now specifically QBO, I speak for a lot of people, were unaware of the huge amount of hidden fees that they have. Could you give some warning signs for what we should be aware of? And not just like credit card processing fees, which are astronomical. And there's a huge amount of competition in that area, so people don't have to use QBO for that. But what are flags that you think small businesses should look for?
So on that front, Intuit is, in my professional opinion, as far as that goes, one of the worst ones about the way they present their costs in there being hidden fees, exactly like she said. Credit card processing fees are there. If you choose to, Dave referenced earlier, email your clients invoices and allow them to pay that, and they're about 0.5% higher through QBO, those payment processing fees, than if you had used an independent payment processor that works with QBO and essentially does the same thing, and it would save you money. Payroll is absolutely got hidden fees in it. They tell you that it's going to cost X number of dollars a month, depending on what level, for lack of a better word, that you choose of their payroll service. And they tell you that there is a cost per employee, but as you're going along doing payroll, each time they might throw this pop-up at you that says, hey, if you do this, your employees can get paid in 1 day. And it has a tiny little asterisk there that feeds down to tiny little letters that, even if you had 20/20 vision, is very difficult to read. And most people don't see it, and next thing you know, your monthly payroll charges with Intuit, for if you run payroll twice a month, have doubled. So definitely make sure, not just with Intuit, but anybody that you're using on software, read that fine print, number one. And again, this, if you're working with an accounting professional, most of us are well versed in these things and can offer you alternative solutions. Intuit will tell you, oh, QBO is going to work with all these independent apps, but they're never actually going to push to you the things that replace what their software does. And cash flow is an issue for small businesses. And if you can get this done, well, even if you don't have cash flow problems, you could have $1 million in the bank, but who wants to pay more for a service if they don't have to? There might be something better out there for you and what you're doing that meets your needs at a better price point. So definitely be aware of those things if you're going to use any accounting software, but even QuickBooks Online. Sign up for the software and don't do the add-ons until you do your homework and figure out what's going to work best for you at a price point you're okay with.
Okay, very good, thank you. I think we have time for one more question from the audience. Is anyone else? Just have time for one more? Okay, right over here, Elizabeth, right there. Right.
I'm a first-time small business owner getting started. I've been talking to a couple CPAs. I don't even know what I don't know, so I don't even know the right questions to ask. And when you talked about a menu of services, I'm not even certain I know what I need to ask in order to hire the right CPA. Could you give me a good starting point there, please?
You want to go? Sure. Well, hopefully if you're speaking to CPAs, they will help you guide that conversation as well. And so we see a lot of new business owners come in, and like you said, they don't know what they don't know, because you know your trade or your expertise in what your business is, but you're, I assume, not starting an accounting business, so you don't know the accounting side of it. And so asking questions like, how do I need to form my business, which may be an attorney and accountant question as well. You know, I would also suggest having legal counsel and having an attorney when you're starting your business as well. But a lot of the topics that we're talking about today, how do I need to keep my accounting records? What type of services do you offer, and how much do those cost? A lot of the accounting services that your business may need, they can be done in-house if you have an employee or yourself as a business owner that's able to do that. You can outsource that. Obviously, outsourcing is going to be more expensive than if you did it yourself, but know what those services are. A lot of times accountants have staff that can train you or your staff on those accounting functions. So if you don't know, or your staff isn't up to speed yet, they can, you know, an accounting firm can also train them so that you are aware and understand what you're doing on the accounting side as well.
All right, well, thank you for those questions. I think that our time is up. Thank you, panel, very much for sharing your expertise to you small business folks. I appreciate it, and thank you for allowing me to ask you these questions. So thank you all. Appreciate it.